All right, guys. Again, same assignment. Couple of minutes. Think about this and let me know what you think about this structure, accumulation or distribution. All right, guys. So what do you think? Okay. All right. So answers already here. Okay. Or just write it down if you have not submitted your answer yet. All right. And that's it. All right. So let's look at what it was. That was an accumulation. And we kind of see how we went into this apex formation. So let's come back to the original view. And I think that's very useful when you are playing this exercise, right, by yourself. So let's say that you're looking at the trading range, and then you created your Wyckoff story, you created your definition of the bias. Then looking at what happens next. And with that in mind now that you know what the bias is, come back and try to analyze and try to see it from the perspective of that bias. So what is it exactly that you see here that would lead you to the conclusion that that was accumulation and not a distribution? Maybe one thing, maybe two things. What is it that you're seeing, guys, here? Why is this an accumulation? decreased supply across the structure, big supply bars, but no result to the downside. So we're looking at this decreasing volume signature right here. And then at the same time, what do we see with the price? We're looking at the apex formation. We might be thinking that, could this be a TP formation? Well, if this is a TP formation, and let's say we're having a buy-in climax somewhere here, and this is our phase A, then we usually would not see the highs overcoming that buy-in climax high. And here we definitely have that. I think the confusion here, for somebody who would be thinking that distribution comes from lower highs, that is quite a few. And then also, let's say that volume signature where demand goes down and the price does not go up, that also could be confusing. What else could we see? Result to the downside diminishes, yes. Higher lows created, no selling off the top, very good. And then higher lows, okay, great. What else? What if we would just look at this trading range in terms of some kind of segments, right? So maybe like segment 1, segment 2, segment 3, segment 4. What could we see here in those segments? Volatility goes down. So we kind of like, even if we don't see the volume signature, right? Even if we don't see the volume signature, we see how volatility is decreasing every time there is a reaction. We might probably say the same about, the rallies as well. We could say, well, the rallies are also diminishing in terms of the result. They're not as, as big. But even on the latest rallies, we still see, some bars that, have momentum behind them. On the way down here, we have probably one bar that deserves, our attention. The other two or four, are somewhat mediocre. But just generally, we kind of see how we're starting with a lot of volatility here, and then it's less, and it's less, and it's less, and it's on the background where volume came in, and then nothing happened. So it's almost like they exchange the shares, and then they are doing nothing that brings us to the non-volatile environment, and we would be expecting just a continuation from here. Really interesting backing up action. Why is this backing up action interesting? Well, because out of the apex, we're not going to expect a major sign of strength, right? We might be saying that maybe this was a major sign of strength, but we would have this kind of like a smaller breakout, and then a smaller backing up action. A smaller backing up action after the apex is a very common occurrence, and horizontal nature only suggests that there's going to be some momentum out of the gate. And we see that, and we see that also, for the intermediate time frame as well. All right. Questions, comments? Points of entry. Yeah, so let's talk about that. Where would we be entering? So this bar right here suggests that we have to wait for the retest. So somewhere here after we probably either this bar or this bar is right here, this, because this is an apex, this bar as well, and then this bar right here and this one. So let me just do this again. This, 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 and this. All of those are going to be good points of entry for for different reasons. And again, we didn't come into the position on this bar because it was a little bit too volatile. We needed some kind of testing that came later on as a higher low. All right. Again, let's do this again. I'm going to give you a minute or so. Think about this. And maybe we'll do this in a different way. Okay, so think about this. All right, guys, what do you think? Is this an accumulation or a distribution? Let's look at your answers. All right, and we are mixed here. Okay, so kind of like what maybe I was expecting. So, excuse me, we're gonna do this together. So we're gonna do this in a different way. So let's have a volunteer, and then we're gonna go through the logic in a different way, right? So we're gonna talk this through. So say yes, and I'll unmute you. Hi, Dimitri.
Hey, Ramon, what's up?
I'm doing well. How about yourself?
Doing good, thank you.
Well, listen, do whatever is needed with the website. You want to check this out, and just like go do it. Ask Nancy, what needs to be done, and I'll be really happy to, to take on any help that we can. Hopefully, we'll launch it like in a week or so, or 10 days before the Christmas
Okay,
or
great.
something.
I'll follow up with her.
Yeah, and thank you guys for all of your support. You know, everybody's anticipating. We're working really hard. We're taking a little bit of a break this week, just because it's just been really, really hectic uh, with the website and other things. But we really appreciate all of your thoughts about this and help. So, uh, thank you. All right, Dmitry. So let's start from first of all, what do you think this is?
Well, I was mixed, but
Okay, so if
I,
you're
I,
mixed, hold on a second. No. This is really good. If you're mixed, right? So let's just think about what we should do then. If we are not sure about what this bias is, then we are like 50-50, right? So we just need to find either a confirmation or a failure of one bias over another. So let's start from left to right and let's see where it's going to bring us at the end of the chart. So at the beginning of the chart on the left, so the first maybe what, like 5 columns, an uptrend.
uptrend,
Okay,
buying
what
climb.
buying climax where?
Right to the left there, right by the arrow.
Somewhere here.
Yeah, somewhere there.
And we kind of probably could say that we have some structure here because we're seeing that the climactic volume actually came on this bar. So it's almost like we have a previous high as a preliminary supply, and then we have a climactic stop in action, and then it materializes into the distributional range. As you could see, guys, there are so many spots like this. I mean, if I would be thinking about how the price moves generally and where climactic action actually occurs, the actual definition of the buying climax is somewhat incorrect in the way how it could unfold. In a lot of cases, we have a buying climax that produces first initial stop in action, and then there is a trading range, kind of like a distributional range, and it repeats over and over again. Look at this. Same here. So climactic volume came right here on this bar, somewhere here. Doesn't really come, later on, right? So distribution. So Eric is saying it's like a residual momentum upside after supply has been presented. Yeah, so we've talked about this concept, right? So two forces, supply increase and demand increase. Demand increases on weak hands, supply increases on strong hands. And here is this collision which becomes a buying climax. Now demand might be stronger. So after such collision, we still could have that residual momentum. And it's usually going to have that upsloping structure. So this is what we're seeing here. In a small distributional patterns, especially those could be indicative of some kind of reaccumulational pattern where we first initially seen the reaction and then we see the rally. Reaction and then we see some kind of attempt to rally. So just an element of the, a piece of the accumulation that could happen, prior the reaction. Okay, well, Dimitri, what about the character with which the price moves up? What can we say?
Looks like a pretty healthy upswing move.
Okay, what else? Let's just observe as much as we can, and let's just state here as much as we can. Do we see different segments maybe to this whole rally?
Yeah, so starting about mid-June, we start seeing pullbacks start to occur.
Mm-hmm. So maybe like this area right here, right?
Right.
Okay, so different texture from, let's say, segment 1. Then we see that segment 3, which is basically 2 segments, buying climax, and then that distributional range. And we've talked about this. I've shown you guys, this characterization of the uptrend. We have the momentum buying first, And this is where the volume could increase, where the spread is going to increase, momentum velocity both increases. And then after that, there is some profit taken. And this segment we're calling the vertical absorption. As profit taken happens, supply increases locally. And through the buying, the vertical absorption happens in this area. So we're seeing how supply is being observed on the momentum first, then in the vertical absorption, supply is going even lower. So then by the time the speculation happens, supply is in strong hands. And when that happens, that's why the buying climax and speculative way happens this way. All right, well, what is the bias then, Dmitry, on this rally?
Uh, at this point, I would say it's to the upside.
Okay, great. Then the next segment, we are seeing probably, we're going to look into maybe like this action right here. And let's divide it into two segments too. The reaction itself and then the trading range. So
So
reaction, what is the bias on the reaction?
well, it's a locally to the downside, but then it meets some sort of demand uh, at the 32, 33 level.
Dmitry, I guess here I want to ask you maybe a question in a slightly different way. Is this reaction a bullish-like reaction or bearish reaction? Meaning that, is this just a reaction in the uptrend, or is this a reaction that, is developing the downtrend characteristics?
Well, it definitely seems like a change of behavior.
Which is each suggestive of a trading range.
Yeah.
But we want to kind of gauge on, the deduction gear here as to, well, if this is a change of character and it goes into a trading range, does it look still bullish or bearish? I mean, for instance, do we negate all of the gains that we have built on the last rally?
No.
Do we have the effort that is such a great bearish effort that produces a great bearish result?
No.
No. So still at this point, we would be thinking this way. We would be thinking a change of character, definitely, which is going to lead us to a trading range. But the character of this reaction is still somewhat bullish. Even though supply has occurred, supply has come in, we're still thinking that this is going to resolve itself in a bullish way. All right, do we have some kind of causality for that? And is there a confirmation of the price and volume action that this causality could resolve itself in a bullish way?
So for the most, for the larger part of the duration of the trading range, I see that the price is hopped up onto the upper side of it, the top
Yes.
side of it.
Is this a strength in itself?
It feels like a strength. Yeah.
Mhm. Yes, so it's strong, and that's on the background of supply going down. So
Hmm.
this looks like elements of the reaccumulation. So we're seeing strong uptrend, change of character that has bullish characteristics where maybe there is some selling, but then demand is coming in, and then throughout the whole trading range structure, supply diminishes, and structurally we are at a much stronger place, suggestive of the rally. From here, if we rally, we're probably going to rally above the buying climax high, which we do, and we go into the upthrust. On the rally, is this a good rally for us? Does this rally confirm the up bias at this, at the that we've created, so far?
Yes.
Okay, yes, we're committing, kind of like in multiple ways, right? So maybe somewhere here, here, maybe attempts here, not necessarily that much. We have a slight increase in the volume signature, not necessarily too much came out of this rally, but it acts, the character of this rally still suggests bullish behavior. If we're seeing some supply that's coming in, we want to see how that supply is going to behave, right? How the price is going to behave, price reaction to that supply. What is it? So what is the reaction of the price to the supply that might have come?
It hits previous resistance, which is now support.
Mm-hmm. Yeah, and kind of stays in this trading range in this area. So
Still
non-aggressive.
bullish, in my opinion.
I'm sorry?
At this point, I would still have an upside bias.
Yeah, absolutely. So there is nothing damaging, and we're even thinking about maybe like a new uptrend right here that is on the way. So this could be construed by us as even some kind of oversold condition, temporary oversold condition. And we're thinking that this could be a point of entry for us. Something like this also is going to attract us to that. And then suddenly supply comes in right here. So then how do we interpret this?
Well, it's another react. We have a reaction here. Um, it seems to be the price moves down more than the previous reaction, the previous two reactions. That one and all the one to the left of the beginning of the trading. Yeah, right there. So at that point, I wouldn't call it a bearish bias because it still hasn't overcome onto the downside. It's still just hitting that support level.
Mm-hmm.
So yeah, at number 3, I'd still think it's to the upside, but I would be cautious.
Mm-hmm. This is where the texture has changed, right? So we've been in one texture which was kind of like this momentum up move. Then we went to another texture where we are seeing that that momentum is gone. There is nothing there, and there is some resistance to the price movement to the upside, and we are observing this on the increased volume signature. Now, what's interesting is that it does deteriorate the momentum, but it doesn't deteriorate the structure yet um, to the upside until probably second reaction and third reaction. This is where you start kind of like questioning is, that supply that is coming in. We're seeing supply increase for sure, and we're seeing that temporary, on the local basis, we're starting to have lower lows, lower highs. So therefore, there is some deterioration right here. We need to understand what kind of result we have on this deterioration. So what is the result? We are trying to commit to the downside on reaction number 3, and then we are coming back. So right here, when we are coming back, when we are overcoming, let's say this high right here on this bar, this acts as a confirmation that we went through the period of vulnerability. We were thinking about the bias to the upside, and then there were some signs in the volume signature and how the price started to react that suggested that if this is going to resolve to the downside, now is the timing to do so. And yet it did not resolve itself to the downside. It tried to do that, but it didn't. And then it confirmed that still the bias is going to be to the upside, at least at this point of time. Okay, well, Dmitry, then I would be thinking that we are still bias to the upside up to this point. So then what happens with the last reaction?
The last reaction is the largest reaction in the chart, and I do see some supply coming in towards the end of the reaction, although I could also see that as potential demand. But yeah, so yeah, it's a large reaction, but it hasn't overcome the previous support. So it hasn't broken that support. And at this point, I would be thinking, is this part of a larger structure phase C as a second point of fear?
Okay, so what would give you that kind of like confirmation that with information that we see, not the information that will come, with only what we see, judge the market by its own action? What would be the confirmation that indeed this is an accumulation?
The only thing at this point after that large reaction is the fact that it hasn't broken that support level.
What about the character with which the price moves to the downside?
Does move pretty quickly down.
Okay, so
but I see the previous reactions are pretty quick too, and this one kind of had to struggle at first, then
well,
broke down.
hold on a second. Let's define the quickness then. If you're judging something against something, so which reactions are quick reactions, you know, like in this whole formation, so that we would.
So yeah, so like right in October.
Okay, so probably this is the fastest, right?
Yeah.
With which the price moves down. Maybe this as well. Okay, so what do we see here? Let's say in the first move to the downside. This is actually this distributional kind of like range substructure here. So this is the first leg to the downside, second, and then third. So in the first leg, what do we see? Do we see the same speed with which the price moves down?
Yes. It's well, a little bit. Yeah, pretty quick.
But
The,
probably, I mean, like, is it
not
quicker
as.
than
Oh no, sorry. I was
the
looking
ones
at
in
that
the
last,
yellow?
the last part of number one. No, the overall all of number one is pretty slow compared to the previous
Yeah,
reactions.
in yellow. And then it happens on what kind of supply?
Minimal supply.
Yeah. So here we had an ease of movement. Supply was low, and you know, here supply was increasing, and here definitely supply was increasing. Here supply is not increasing. Okay, well, what about number two? How about the velocity? Like if we would compare this portion of the reaction to this velocity right here, what can we say?
Um, it's not as fast as the October velocity down, but it's it's not pretty either. It's still I see local supply increasing there a little bit. Yep.
Dramatically?
Not dramatically.
Not
Nope.
dramatically. So we're not increasing that much from, let's say, what we've seen here. And the selling is not as intense. It does go below this support of 37, 38. What do we make of that? I mean, we are creating a lower low relative to the previous low. But think about phase C, right? This local low will be breaking some of the lows in phase B and potentially also in phase A as well. So it looks like there is an attempt to spring, an attempt to commit to the downside below this low right here. And we failed to do so, but we committed below 78 and 38. So if we're doing that, we need to see some kind of like, capitulation, where institutions are capitulating below this demand level right here. And here is our capitulation. So this comes on these two bars right here. Let me do this. These two bars, that's our capitulation. Does this look like an urgent selling by institutions where they're getting rid of their position?
No.
Probably not. We probably would be expecting capitulation looking more like this. That's how it would happen. There would be some urgency and they would be selling and the price would be moving. This is more like some demand is coming in.
Man.
Yeah,
Yeah,
and
because that large supply signature right there, where you drew the line, I think that's the bar that opened below the previous bar but closed up higher. So it has the white body, but it's still red. It shows that the effort to the downside is increasing, but the result to the downside is decreasing.
mm-hmm. And then what happens after that with the supply?
And supply diminishes from there.
Yeah, so there are additional reactions here, and supply is diminishing. We have a slight increase in the volume signature. So we might not be very comfortable here with, let's say, an entry itself. We might be also questioning the bias, but as we go through this whole story, we're seeing that the bias is to the upside, and then here's the hesitation. But when we look at the character with which the price moves to the downside, we don't see a lot of selling. And we don't see a lot of selling in the spread either. And we know that phase C could potentially be a lower low. It could potentially be below the previous levels of the support in phase B. And the fact that it was not able to overcome a potential phase A low and became a higher low in this larger structure then suggests that it could be an attempt to stop at this point, create some kind of range, and then resume its attempt to retest the previous highs. So this could be our assumption at this point. We could create different type of scenarios confirming those assumptions. We could say overcoming 35 and a half, I'm a buyer. Overcoming 37, I'm a buyer. Then any type of sign of strength bars into 40, I'm a buyer. And then let's say if your bias is still not, excuse me guys, if your bias is still kind of like undetermined, you can say, okay, well, if I'm going to have a very strong commitment to the downside, then, especially below this level, like 31, 32, then I'm probably, sorry guys. So if we would be seeing more of the commitment to the downside, we might not even take any trades at this point because we might be a little bit too late to the downside. So if you're in doubt, obviously you want to strategize here and just build everything on tactics. But I want you to develop the skill of identifying the bias before you actually go into contemplating tactics. Tactics should be even more as a kind of like confirmatory tool. Yeah, tactics are confirming that this is the timing right now to get into the position. But by the character, we should be thinking that this is an accumulation. All right, let's see what has happened. And we're looking at Hess. And we were somewhere here. This was, of course, a little bit trickier. I should have probably included this area right here. But I wanted you to look through this. Okay. What else did we say about the character? Well, we didn't really say as to how it's gonna, go up, but we said that we probably going to be buyers here. We're probably going to be buyers here. We're probably going to be buyers on any of type of sign of strength bars, like this one right here. Maybe this was one as well. So somewhere in this area, we would be, buying on the way up. Again, look at the structure of the move. We have three components. The first kind of like momentum buying off the bottom. The second one that has that profit taking that comes in and just pushes the price to react. So more of the vertical absorption, sometimes horizontal. And then once supply has been absorbed, then we go into the speculative phase. All right, Dmitry, questions? Any questions?
If you go to the last slide, so I followed everything to a T up until that last large reaction. I'm having trouble wrapping my head around. I understand how you broke it up into 3 segments,
Right.
but segment number 2
Mm-hmm.
gives me anxiety. And to be frank,
Mm-hmm.
when I see that and I see, that volume signature compared to the previous reaction in phase B there, that quick reaction down, that seems to have similar, volume signature. So can you deconstruct that a little bit
Yeah,
again?
absolutely. And it's a little bit tricky, yeah. And I would be thinking that I could probably find some examples, like right off the top of my head, where we might have the same type of signatures and it would resolve itself in more downward movement. So we still need to figure out, how do we actually kind of like resolve this. But the key here is in the character. So we even need to see, like we're seeing that result, there is commitment below one result, there is no commitment below second result. So we are, thinking about the second result here, but the comment about committing below 37 is actually valid. So we need to understand what is the character of that commitment, what does it bring? So there is not a lot of distributional character on the way up as kind of like a value cell, and then as the momentum cell, and then on the way down as well. And even, whatever volume comes in right here, we don't see a lot of selling. So if we're saying that there is no institutional selling, we are thinking that the previous bias is still correct, right? And then we have some situations, and in WTC we've talked about this, where let's say institutions might be extremely active in phase A and B, and then in phase late B and C, they're going to be inactive. We could have situations where they're going to be extremely active in phase B, and then they're going to have a local capitulation into phase C, and then they move to the upside. So these are the two scenarios that we're looking at in terms of how institutions are participating. And we're seeing that their participation predominantly was at the beginning of the trading range. And then going into the later portions, they are only starting to participate at the value zone right here. This is where they saw the value before. So I would say probably just carefully examining, and comparing. And even though it looks like, it's almost the same, if we would take, Dmitry, let's say the average down spread, right? So we would average all of the down spreads, and we would compare it to the average down spread right here. I bet you that probably the average spread here is going to go down. Average true range. It's going to go slightly down than here. Would you say?
Yeah, very possibly, yeah.
Mm-hmm.
Do you recommend using average true range if you're in a situation like this where you did your
Why don't
Wyckoff?
we do it right now, right? So uh, let's just look at this stock at this point of time, 2006. and we're going to look at the average range. I'm not looking at the indicator because you could see this in price.
Mm-hmm.
And by the way, look at how it kind of repeats this pattern again. So if we're thinking that this is an accumulation, this whole range, right? Look at the climactic action, and then what do we see in phase B? It kind of behaves in such way that suggests that, well, not necessarily that there is a lot of strength, but look at phase C. Phase C has this drop that you probably would say this is the same type of drop that gives me that confusion, because it commits below certain levels of the support, does not necessarily have like a big increased supply signature. It's more kind of like local. So what happens here? They bought in here, value investors. ITFs were coming in on this rally, and then they were giving up here. They were giving up here. Then they started coming back into this rally, and then they started giving up here. So it's the process of where value investors are kind of, bullying, those momentum investors, right? So they are basically, buying at the extremes, and that gives them the confidence to hold on to the position, where ITFs are getting in and then they are burned out by the position not going anywhere, and they have to give up that position. That produced liquidity events again, and this is where value comes in and buys again. So it's almost like ITFs are better be behaving somewhere after phase C. When they buy in phase A on the oversold, and that creates phase B, usually it resolves in the late capitulation, in phase B and into phase C. And that's how the structure is being created. I mean, like, the fundamental question is, like, why do we have the trading range like this? Why do we have that high low? Why do we have that reaction here? Why do we have that quick recovery? Why do we have this climactic run? Why do we have the quick recovery right here? Why is the price kind of consolidates right here? All of this is just comprised into the actual behavior of market participants when, we're thinking about the strategies that they use. So value, uh, trend followers, giving up on trend follower and giving up on trend follower, and now they're going to come back here and momentum is going to increase. And that's how the structure is being created. But let's look at ATR. And let's take 21 days. Move it up. Okay. And let's go to 2006, right? So we were somewhere here, 2006. And we wanted to look at what rallies, Dmitry? Oh, we wanted to look at the down move, right?
Yeah.
Yeah. Okay. Well, here it is. I already see it. Yeah. Okay. Excellent. Good question. So here you kind of could think about momentum and the velocity as you look at the ATR. So we were looking into this area right here, and we were saying that the momentum has diminished, velocity has, well, the velocity could actually, no, velocity also diminished. And that's because the spread started to diminish. Well, visually it's kind of hard because Dmitry was saying, well, it looks somewhat the same. So you could use visual tools like ATR, all of the other indicators. I mean, we are just trying to develop more of the visual context for our interpretation. So I'm kind of always thinking, like, if I would average all of the down spreads here and here, they probably would be different. This probably would be diminishing. So we're seeing in the ATR how, the numbers for the average true range are going down. Whereas on this reaction, they were actually going up, as they were going up on this reaction as well. So you could kind of try doing that.
Yeah, that seems very useful.
And look at the next environment here. Again, this is something that is suggestive of not an urgent way to get out of the structure. So it's more like supply has been absorbed and in its strong hands, but because ATR is not increasing, it doesn't suggest a very aggressive buying and very aggressive upswing. All right, great. Let me see what other questions we have. Dmitry, thank you so much.
Thank you.
All right, let's come back to our slide. It makes sense if you think of the automatic reaction or as a CO value zone, Eric is saying. Yes, you could definitely do this, and you might be thinking, okay, well, where is the actual buying has happened? So I'm seeing that this was a big bar, this was a big bar, and the bar after that. Also, there is a bunch of bars here that are suggestive of buying. So this is what we would do. Okay, we would identify all of those, and then we would say, okay, let's look at where they are. So probably all of this, this. So somewhere here is our value zone. So every time the price comes to that value zone, rebounds, and then it goes into the oversold condition. And here on the previous attempt, we had a lot of buying that has happened. In this area right here, there is really not a lot of buying because selling has been depressed. So there is just a little bit of buying that stops the price from moving further down, and it should recover from here. And that recovery, and see, like the recovery to 38, 39, I would expect to be somewhat quick, maybe with like some of the tests, but quick. And then after that, that's an interesting question. Usually I would be thinking that the price would actually go faster here. It's interesting that it doesn't go fast. Yeah, it's not as fast as I would think it would go. All right, well, this is a question for another class and another topic. I'm confusing the increase in column in volume probably over the last 10 days. Okay, so this one right here. Also, as effort to go up with no result to the upside. Should we be looking at that as increased supply with no result to the downside? We're probably going to be looking, at this area right here as kind of like a full structure, right? So here is where the most dangerous supply potentially has come. What happens after that? Diminishing supply characteristic. If we have an increase effort to push the price down, then what is happening in the last 10 days? Well, we are dropping to the downside, but do we make a commitment to the downside? No. So we need to look at both. Obviously, we can't ignore the rallies when we are discussing all of this. So you would be right, Eric, that to say that the rallies here are not that impressive. So therefore, we would be saying, yeah, we are thinking accumulation, but we need signs of the confirmation, which would be this, which would be this, and which would be this, something like that. And then we are acting upon those. But definitely we want to develop the bias prior to that. And that's why sometimes these are tricky. and we make them tricky because we want you to think about the bias and not necessarily the last bar. All right. I think that's it. I think that's it for today, guys. Let's just stop here. And I think that we should go away a little bit from the bias next time. Let's start thinking about other things. I will look into our materials as to what else I wanted to present to you guys in terms of the knowledge, and we'll see what kind of skill building exercises we can have around those concepts. Also, for the last session, let's start accumulating any questions that you might have for me, and we could go through a lot of questions in the last session. All right, well, with that, for those of you who are in the States, happy Thanksgiving. I'm sorry, happy Thanksgiving, still on the Halloween. And for those of you who are around the world, well, we'll see you next week on Tuesday as usual. Thank you guys so much. And don't forget, no WMD tomorrow. You should have received an email. This is our, one of the breaks per year that we take around the Thanksgiving. So please keep this in mind. Have a wonderful end of the week, and I'll see you next Tuesday. Bye-bye.